Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Thursday, and we're at the 16th of February, 2023, just getting on at 6:30 p.m. Central Time. I got so excited today. I was writing a special update for my traders, and I wanted to go short at the market in the S&P. I forgot to put a price in there. I had to send it right afterwards, and it worked out, but I felt so stupid after I did it. And I was screaming at myself as I was sending it out because I have been waiting for an opportunity to go short. And it just wasn't there. It presented itself today, and I don't know if it'll win or not. Okay, I can tell you I'm ahead at the moment. My clients are, my subscribers. We'll see what it offers in the morning when we wake up. But let me explain a couple of things. I think before I do that, I should also tell you, it's President's Day coming up. You know, Monday we have abbreviated trading, but I'm going to have a sale for you. 50% off any research of mine. That's not my charting courses. It's any of my morning subscriber videos. It also includes my full research where you get my twice daily written updates. And this is both for new and returning members, not existing members that say, hey, Ira, I want to renew my subscription. Give me 50 off. No, this is not for that. You get other things from me, plenty of them. So let me earn a living, okay? And this was only through President's Day, and it's over at midnight that day. You want to take advantage of it because the price is going to go back up, and eventually I'll raise the price on everything. But how do you get there? Okay, go to our website at iraepstein.com. Move your cursor up here at the top. There'll be an icon through the whole show. You can do it that way. So one of those two will do it. Please remember that. And you can call my staff if you have a question, but it's iraepstein.com. Or just take your cursor, the easiest thing if you're on a PC up there, and do it. And once you're on the website, just go to our research area, and everything is laid out for you there. Could it be any simpler? I don't think so. All right, so let's talk about what happened and why I got so excited. I'm looking at the markets and I'm going, you know, for the past 2 weeks, all bear news has been met by the market breaking early off the news. I don't care if it was the jobs data. I don't care if it's CPI data. I didn't care if it's retail sales. It's been a whole host of things. And then the market comes back. And I've been writing about it in my newsletter saying it doesn't matter. The naysayers are in there buying with both hands each and every time. So it's a question as to when you have enough of these bearish pieces of news that they start questioning, is this the right thing to be doing? We may not be there. Do I think we're there? I think we're at the inflection point. Why? Because suddenly I'm looking at the Fed watch page. And you know, a month ago, there was a 5% chance, just 5%, that the market would get a go between 5 and 5.5, not 4.75 to 5.25%. On that page. Suddenly, we're up to 18%. Then I'm listening to Loretta Mester and Barkin and some of the other people as they're talking, and they're in favor maybe of even going a 50 basis point hike at the next meeting. Why? Because these numbers are hot, folks. They're not what they should be. The unemployment claims comes in today down 1,000. The market was looking for a gain closer to 200, and 200,000 is not something the market should be at. This is 5 weeks under that. So everybody that's getting laid off is getting a job right away. You are seeing a bit of climbing in the continuing claims, but not enough to get even closely worried about anything. And then you add into it the strong PPI number. Now, we are seeing certain areas have problems. We saw the Richmond Fed have some problems recently. We've seen Philly problems. We've seen different parts of that, but that's what's supposed to happen. What's supposed to happen is the Fed raises rates. You go from 3.4% unemployment to 4%, 4.5%. The inflation comes out of the market. The Fed eases, and we're back into an economy that's growing. What's not supposed to happen is you can talk lag effect all you want. At what point isn't there a lag effect? This sounds to me transition. Remember the word, we're transitionatory? We're in that transition phase. Did the Fed not say that over and over? And they were wrong on that. So I'm questioning what's going on right now. This doesn't look like transition from doing it, waiting on a lag, and getting the result. This is the longest lag I've ever seen. I'm not saying it can't take place. I'm saying that maybe the idea that a 5%, 5.25% isn't high enough to make the market believe that that's the case. And do it to the economy. It's not just what the market thinks. You've actually got to get it done in the economy where interest rates are painful enough where they hurt everything. We're not there. What do I think the Fed's thinking? I think they're thinking like I am. Now, what will cement the deal or break this thought is we're going to get before the March FOMC meeting, more jobs data, more CPI, more PPI. You won't get that data right in front of, and let me use the word right in front of very carefully, the May meeting, because that happens right at the beginning of May, so you don't get that. But they will get, obviously, the April data to make a decision. So I think that these numbers are high. There is a point at which logic doesn't work anymore, or logic takes over. Which one do you want? The logic has been that traders have been thinking the Fed will never stay the course and breaks on the stock market should be bought. Proof in the pudding, you're still getting great earnings. So I can't argue that. But I can argue the Fed will win the game ultimately. Do I think the Fed will get us down to 2% inflation? I don't. I think they'll give up at the 3-4% range and just come with the reason that this is good enough, it'll eventually get there, and they'll be through with whatever they've got to do. That's my own thinking on the market. Could I be wrong? I could be very wrong. I'm the original Swiss cheese guy. I, unlike most people, admit when I'm wrong, and I've been wrong plenty, but I get right plenty too. When I'm looking at the weekly area chart of closes, we're down 0.25% for the week. Nothing. So we're basically unchanged. When you look at the action, as I said, you got consolidation taking place. Which way is it going to break out? Is it going to go over this number? Is it going to go under this number? That is the big question. And the way that it comes out is going to be very, very important. For the very first time since back here, when it got rejected. Let's talk about that. See here, you end up with lower highs, lower lows. You're repeating the pattern. Will it get rejected? To reject it, you got to get back over today's high. You had a big outside day down. Now, why did I get excited today about the short side? Well, if you've read or taken my outside day course, you understand the importance of today. I'm wrong in my thoughts if the market gets back up and over today's high. Now, today's high was specifically, let's get to it, 41.69. I'd have to rethink. Doesn't mean that I don't think ultimately this will happen, but I'm wrong on this immediate chart pattern. If it's not taken out, which is what I think is going to happen, it's not going to be taken out. It's under the 18-day average. It's getting follow through tonight. If it's not taken out, I got these potential targets along with Bollinger Bands down here at 40.27. That's exciting to me. From where you're at right now, that's 60 points. That's a big move in the S&P any way you go. In addition, momentum is turned down. So, to surmise it, lower highs, lower lows, under the 18-day average, momentum turning down. Doesn't mean I'll be right, but I'm negative now on the market. Not so in the NASDAQ. The NASDAQ, while the trend is down, it's still holding the 18-day average. Yes, it had the momentum of an outside day. Yes, it's got momentum here. This is the pattern. That's the momentum down, but it needs to close under the 18-day average. In the Dow, send me a penny. What do I mean by that? Did I not say back here, you're going to get moves that are going to whip you apart? So you went up, the traders were buying up here against the Bollinger Band, and you heard me the day it happened. I said, I think it's suicide to do that. And now you're at the lower Bollinger Band. I want no part of that. You will get a breakout, and you've gone sideways long enough to get that breakout. If it's to the downside, If, I don't know that it is, I'm not betting it is, I would be telling traders cover shorts. The S&P is the place to be, not this, in my opinion. If you close under that, maybe you can get down to these numbers. I don't like that the market is oversold, so I would never tell a client of mine to go short under a Bollinger Band when you're oversold. I would tell them if you are short, that's where you cover your shorts. The Russell is trying to join the parade. It needs to close underneath the 18-week average. If it does, and if we get weak closes, we'll go over the weekend, and I'll be here with you over the weekend, and we'll look at the weekly charts to see, are you getting anything there? In the T-bond market, look at how this is working. You've got your embedded reading. You're riding the Bollinger Band down. Riding it, folks. Don't even try to pick a bottom. I've seen these things just go and go. Remember, you're not settling under the band. You keep hitting it. It's bearish as can be. That's how I look at it. 10-year note, same identical pattern, same embedded reading. Dollar index, now it's developing what? Let's take a look together. Both numbers were over 80 today, Thursday. Both numbers yesterday were over 80, not the day before. So the key is, what is it going to do on Friday? Is it going to embed? If it does, it just tells me you're going to get even higher interest rates. That's what's moving the dollar, and that'll pressure the goods that are priced in dollars across the board. I don't care if they're grains, energy markets, gold markets. That's what I think will happen. In the euro, you have an embedded reading. Let's take a look at this. That is what? Let's take a look. Can't count today, Friday. I can count Thursday. Both numbers are under 80. I can count Wednesday. Both numbers are under 80 over here. Oh, and my gosh, Tuesday. So now it tells me if I can get a rally up here, there's a way to do it. It's very important when looking at today's low, certain things don't happen. Take the course on the enhanced reading. Give me a good rally there. I'll be all over this market. I will be very, very bearish on it. British pound, oversold. Challenge now. It's fighting a couple of days now at the 200-day average. But remember, they're talking of lowering rates at the Bank of England. And I think you're going to hear our Fed in March just go, we got to keep going. And I think you're hearing that from all the Fed members that are coming out now. When did you hear Mester and Bullard? It was not Barkin. It was Bullard today speaking and going, no, I think I'd go for the 50 basis point too at that meeting. Now they got worse numbers. Now Mester doesn't vote. Okay, so you got to keep that in the back of your mind. But what about the voting members? I think they're all going, this thing's a son of a gun. So you'll get the moderates for a quarter point, but the hawks are going to come out here, and Miss Lyle is gone. So one of the big doves, Miss Brainerd, is gone now. When we get over to the Bitcoin, again, lower band to upper band. Don't chase upper bands. Please don't chase them. When you come to the crude oil, all right, you still have upside bias as long as you stay over this 18-day average of closes. The market is fighting, and I think you can see this clear as can be at the 18-day average. It is not setting up a buy or a sell at this point. You've got the swing line down, but you're staying over the 18-day average. Same going on here. And I want to get false moves right now in Reebok gasoline. I mentioned it to you just the other day. This rally, I'm looking for it to just whip around, but ideally you don't get back under these lows. You start consolidating. Pull in the Bollinger Band for the ultimate trade in this market. That's what I'm hoping before the spring. In nat gas, it's still a very bearish market. I mean, I look at people and I don't understand why they're trying to say this is bottoming in any manner. We only took out of storage, today, 100 billion cubic feet. The norm at this time of year is 166 billion. The market last week was 195. We still have too much in storage. Eventually, there's going to be demand. We need the Freeport area going. It's been a mild winter in much of the world, not just the United States. We are getting a storm. Today in Chicago, we're back under freezing. We have snow going outside. Why not? It's February 16th. However, there's a huge however. It has been mild by every single standard, and we're going to be back in the 40s and 50s in just a few days. That'll go across the country the same way. So when they talk, oh, there's a big storm, what's the duration and what's the power? And that's been the problem you have with it. So you put it all together. I can't wait to wake up tomorrow and see am I right or wrong in my idea. I could be very wrong, but I think I'm onto something right here, and we'll find out if that works. The bigger thing for you, IraEpstein.com, 50% off any of my research, not my charting courses. Right up here, 1 year, 1 month, combos, either the ETF, the futures, or the package. Your choice, which way you want to go. I'm Ira. I will talk to you over the weekend with our weekend edition of the Wrap-Ups. You take care.